All right, so I'm going to throw together another video right now. I'm not going to really be talking about SPY too much. We know SPY is bullish, but I am going to be covering AMC once again. I'm going to cover the macro once again, and I'm going to go over the possible scenarios of where we could possibly be in the uptrend and what we can expect for the next week and the weeks to come after that. So I went over this yesterday. I'm going to do it again. This is my original thesis, that this pattern that played out prior to the squeeze in January 2021 is playing out again. Pretty much bar for bar. This bars pattern right here is pulled from this and overlaid on top. The only difference with this is that this is descending, so the price action is descending, but it's still playing out perfectly. I showed you with the bars overlaid yesterday as well, and I went over it. How you come down, bounce up, down to the W sequence here, come up to the top, down, shelf, down, you get the wick down, chop, wick up, the cup here, down, up, back to the top. And the blue segment right here, I had to fragment this because we're barcoding and barely seeing volume on a daily basis. So we're moving very, very slowly, being pushed to the right, but still, when fragmented, the bars are perfect, overlaid here. You can see the movement is perfect. I went over this already. We got our first bottom. We got the tri-peak in the middle of the W, and we got our second bottom. And we're somewhere in this uptrend in this channel here, as I mentioned yesterday. So undeniably, the bottom is in. You don't have to worry about downside anymore. Undeniably, the bottom is in. Undeniably, we are in this uptrend. It's a matter of where in the uptrend we are. So that's pretty much that. And I showed this as well. And this is just showing the first bottom here, the three peaks in the middle marked by the green flags. And then you come down to your second bottom here, and then you have this channel that you trade in for a while before you gap over it, bounce off of it as support, and squeeze from there. Same exact thing here. We got our second bottom here, and we're somewhere in this channel. It's just a matter of where in the channel we actually are. Now, the two possible scenarios, from what I can see, because I've been playing around with the chart, trying to pretty much figure out where exactly we could be in this channel. Two scenarios that I see as a possibility. I'm taking the possibility that we are already in this flag here, the gap up over the this is the January 19th to the 22nd flag sequence. I'm throwing that out the window. Just based off the fact that we're still trading in this channel here, and this is arguably the fractal break, the macro fractal break that takes you to your squeeze. Just based off of that, I'm just going to throw that out the window. And the two scenarios that I have as far as where we are in this channel right now is right here. This would be January 13th, where you come down here and then you're pretty much battling for the bottom side of the channel here, battling to reclaim the channel, wicking into it, breaking below, wick into it, break below, same thing over and over, forming higher lows here before you come back up to the top of the channel, which would be January 15th. You come down one more time, and then you gap up from there. That's scenario one. That would be January 13th. Scenario two is that this was January 15th when we hit the top of the channel here, and this downside was this downside here, and we'd be expecting a gap up more than likely next week. So to go over everything I just said again, and I'll use this one with the overlaid bars. All of this is finished. We finished our first bottom. We got the tri-peak in the middle. We got our second bottom, and we're in this uptrend here. This uptrend of bars here, it's a channel. That is where we are. It's just a matter of where in this channel we are. And the two scenarios that I have is we are in January 13th or we are in January 15th. So with that being said, more confirmation here. I showed this yesterday as well. The trend angle low to low, 175 degrees in 2021, 177 degrees in our current cycle. Pretty much perfect. Just more confirmation there at the bottom is in fact in. And just looking at this, here's your first bottom, here's your tri-peak, first bottom, tri-peak, second bottom, lower low, and then the trend angle, and then you're in this channel here, same as here. Undeniably, we're tracking this perfectly, just very slow. it's tracking perfectly. It's just taking a lot longer. And trying to track the micro, but it's very hard as we're barcoding and barely moving on a daily basis. This played out in about 20 days. From bottom to gap here was about 20 days. We're on day 70, I think. So we're moving very, very slowly. We're just being pushed to the right. Now, let's get into the scenarios. Scenario 1, January 15th. So this would be scenario 1, where here is your bottom as you have it here, and then the argument for this would be that the price action was compacted and played out a lot faster than the rest, which it's possible, but I'm not too sure about that. I'm honestly leaning towards the January 13th scenario, but for shits and gigs, we'll say it's January 15th. Here's your bottom, and then you work your way up to the top. This was more of a slow climb. Here's your top. This was just a rifle right back up to the top here. Come back down for the downside of it, as you do here. Come back up to the top of the channel one more time, as you do here, and then you get downside, break below the channel, and then gap from there. That would be the January 15th sequence. Again, look at the bars here and the days. This is a 30-minute chart versus a 4-hour chart. From this green rectangle here until the gap, 16 days. Over here, the start of this green rectangle here to where we currently are, 71 days. We're moving very slow. We're tracking, but we're moving very slowly. Probably because we're expecting a huge move. The algo is preparing for a huge move to the upside, really trying to drag this out. Doesn't want to pay us. It's programmed to make money. It doesn't want to pay out. So it's gonna do what it has to do to burn premium on calls and drag this out as long as it can, collect as much premium from the calls as it can, and pay out the least amount possible. That's how it works. That's how Wall Street makes money. So this would be the projected move. If we were in the January 15th sequence here, we could probably expect a gap up over this channel to the $7 range this week, potentially Monday. Now, there is a case that it wouldn't actually end up being on Monday. Let me find that. So here, from the top of January 15th, you wick below the channel, and then you come back into the channel, and then close somewhere in the middle of this range here before you gap up. So far here, we hit the top of the channel, we wicked below the channel, but we're still below the channel. So there could be an argument that we slowly climb back up somewhere into the middle of this range around 550, and then from there, you would gap up. So that's one scenario if we're in January 15th, is we slow climb back to 550 and then gap, or who the fuck knows, maybe we just gap up tomorrow. So that's the January 15th scenario. January 13th scenario. I'm actually leaning more towards this. It sucks. It pushes us back a little bit more, but still, there's no downside to worry about. You don't have to worry about coming crashing back down to $3 or anything stupid like that. It's going to take a little bit longer, but it is what it is. So this would be the scenario for January 13th. And these bars right here, they're not even supposed to be there, but they're there. So this is the rectangle here. This red rectangle would be right here, which would be where we are. So over here, same thing. Here's the green rectangle here, same as here. First flag is the first touch point on the channel. Come down to your low, same as you do here. This would be the lower low, same as it was over here. Then from there, get some sideways action as you do here. Climb back up to the top. This was in like a day. This took us a little bit longer. Hit the top, second flag there. From there, you come back down to the bottom of the channel, marked by the red flag, as we do here. Again, took a lot longer, and then from there, you slowly climb. You got chop all the way up, climb all the way back up to the top, as you do here. You have some chop up and down, all the way back up to the top, until you get to this iteration here, where you get knocked off the top of the channel, come breaking through the bottom of the channel, and then from here, if this is where we are, I'm honestly leaning more towards this right now than anything else. What we would see for the next week and possibly 2 weeks is low volume, barcoding, boringness, breaking back into the channel, breaking underneath, over and over and over again, just fighting to claim this channel here. Until, which over here it would just, up and down, trying to claim this channel until you finally break through, and then you hit the top of the channel one more time, retrace from there, and then you would get the gap up. I'm leaning more towards this. It sucks, but it's taking a very long time. Again, look, 19 days here versus 71 days. It's the same thing. We're just moving a lot slower. And what would this look like? It would look like this. And honestly, this makes a little bit more sense to me. It's fucking annoying, I know. It's taken forever for this shit to happen, but we're almost there. Just based off the macro I showed you, there's not really much left for us to do before we get to the top. And it's going to happen fast. We got all this price action already. Like I said, the first bottom, the tri-peak, the second bottom, and we're in this channel. This uptrend, I keep saying it's the uptrend. This uptrend is taking us to our squeeze. It's just a matter of when it does. So here's what the January 13th scenario would look like. Pretty much like this, just fighting, break through the channel, break underneath, over and over, just fighting to claim this channel before you do. And then you rocket back up to the top of the channel, hit resistance, come back down one more time, close somewhere in the middle, and then gap up from there into the January 19th to the 22nd flag. Now, although this is taking forever, and it's because we're seeing low volume on a daily basis and barcoding on a daily basis, it's taking forever. Once we do get this gap up, that should bring volume, and that volume should bring acceleration and speed. So from there, you could expect that this starts playing out a lot faster. A lot more rapidly, we'll see this price action than this. So that's pretty much that. And then, I'm just trying to take this from the most logical standpoint as I can. I've gone over this before too. Both squeezes on AMC landed 7 trading days post Opex date, and there was a holiday in between. So in January, you had Opex on the 15th, holiday on the Monday. 7 trading days later, it lands on a Wednesday, January 27th. In May, Opex 21st. 5 days there, holiday Monday, 7 days, June 2nd. What are we looking for the next 2 Opex? So the Opex 7 trading days is 100% hit rate so far. In my opinion, it can't be ignored. Possibly it's a coincidence. Maybe it's not at the same time. As of right now, I'm leaning towards it's not a coincidence. What are the odds that both squeezes on AMC happened 7 trading days after Opex and landed on a Wednesday, and there was a holiday in between? Probably slim to none. So with that being said, what are the important dates to look out for? Opex was this last Friday, May 19th. 7 trading days and a holiday in between would land on May 31st. So May 31st would be the January 15th case. That would be this case here where we just gap up this week, play this pattern out, and then that would take us to our squeeze, which would more than likely land on May 31st. So if we're in January 15th, that is what we can expect. If we're not, if we're in January 13th, and what we're going to get is this, this chop, probably for all next week and possibly all of the following week, if not half. Like I'm assuming this is going to take at least a week for this to play out. So if we're in the January 13th sequence, we're going to have to play out all of this price action first, which would just be chop up and down this week. Probably next week, the following week, we would break back into the channel, play this out, and then gap up from there. If that's actually where we are, that would land, in my opinion, that would take us to the June Opex date, which would land on June 27th. Opex in June on the 16th, 7 trading days. It lands on a Tuesday. There's no holiday in between. So this one would land on a Tuesday. June 27th would be the next date of interest, in my opinion. Anything after that, May, June, I don't think so. Based off where we are in the macro, based off where we are on the micro, I don't really see a case for this, this squeezing July, August, September. It makes no sense. We would legitimately have to go sideways for 3 months, which, we're trading in this channel, so I don't really see that happening. So that's pretty much that. We're looking May, June for the squeeze, in my opinion. It's just based off where we are. One more thing I wanted to throw in here, and I went over this yesterday, the SPY chart and the pattern that SPY played out prior to AMC squeezing over here on the right. I went over this in my video yesterday. I'm not going to do it again. So it plays this pattern out, and then you claim this channel, and then you trade in this channel. I went over this. Every time you break below the channel, you claim it. And then from the first touch point on the top of the channel until AMC squeezed in 2021, approximately 80 days. Now, I did the same thing over here. Same pattern played out, and we have this channel now. From the first touch point on the top of the channel to May 31st, which would be the the January 15th scenario, that would be 57 days, roughly 60 days. And then I ran it until the following Opex date, which would be June 28th or 27th, whatever it was, and it's 85 days, 85 to 80 days. I'm just pointing that out. It's closer to the June Opex date if you're looking at it that way. It could be completely irrelevant. I'm just, it's SPY's doing the same thing it did in 2021, so I just ran a date range on it, and 80 days over here, 85 days takes us to the June Opex date. I just wanted to point that out. So to conclude everything that I just said, we're there. It's just a matter of how long it's going to take for us to peak. We played all of this out. We got the bottom, the first bottom. We got the second bottom with the lower low and the tri-peak in the middle. And we are in this channel that will be taking us to our all-time highs. It's just a matter of when. It's a matter of where we are in the channel, and it's a matter of when we get to where we're going. So that's pretty much it. I think I covered everything. Again, the two scenarios. January 15th scenario, we'd more than likely be gapping over the channel this week to $7. The January 13th scenario, we're probably going to be fighting to reclaim this channel all week this week. Chop up and down, breaking above the channel, coming back underneath. Pretty much that's what you would expect all week this week. The following week, maybe if the rest of this plays out, you could expect to hit the top of the channel around $7, retrace from there, and then gap up into the January 19th to the 22nd flag. So we're there. It's just, how long is it going to take now? And how long is it going to take really depends on where in the channel we are. And I said this in my last video, I'm saying it again, it's extremely hard to pinpoint where we are in this channel because, first of all, the April dip here was exaggerated, very exaggerated, and then the climb back up was pretty exaggerated too. It happened very fast. So it's just a matter of where we are. We're barcoding on low volume every day. We're barely moving. It's hard to compare something that happened in 16 days to something that's, we're on day 70 now. But all you can really do is go based off touch points, and that's pretty much it. So again, the two scenarios, we're either in this bar here that breaks you below the channel, and then we're going to fight all week, chopping up and down to reclaim the channel, or we're in the downside of January 15th right here in this candle, and we gap up this week. That's pretty much it. With all that being said, the market's bullish. SPY is very fucking bullish. AMC is very bullish. The bottom is in. $5. I don't think we're seeing sub 5 ever again on AMC. So that's pretty much that. Whether it's just a matter of how green we are this week is pretty much what I'm saying. We could just gap up over the channel, or we just chop, forming higher lows, trying to break back into the channel all week. So that's pretty much it for the video. Market's bullish. I'm bullish as fuck. I'm very excited, and I can't fucking wait. So that's pretty much it, guys. I will catch you guys potentially this week, depending on the price action. If not, I'll be making another update video next weekend. Peace.